Hello, hello. Hi, everybody out there, Facebook. How is everybody doing? All right, how is everybody doing? Today we're getting ready to do our Q&A with all of our business folks. Okay, so I want you guys to get your questions answered today. Get them all. Let's do this. Okay. So over the last 30 years, there's been a lot of people have been asking a lot of questions on how to, how to keep their business up and running and how to stay in business over all these years. They want to make sure that they're doing all the right things to stay in business. So I wanted to get on here today to give everyone an opportunity here from PROBY'S Tax and Accounting to get some of their questions and concerns, get some of that stuff answered. And so this is a time more than ever that we really have to now stay in business. We really have to now know how to stay afloat. We really now have to be doing some of the things that we have been putting off for the longest. Hi, Dice and Nisi. So this is a time that we now need to make sure that we're doing all the things that is necessary so we can stay in business, right? So I want you guys to, if you have any questions regarding your business, right? We're going to talk about stuff that has to do with taxes, stuff that has to do with finances, stuff that has to do with loans, operational issues, anything that your business is having issues with. I want you guys to be able to ask those questions today and get an opportunity to get answers to those questions. So I'm going to, until I see questions, I want you guys to share this video. Share it, because there's a lot of people who might want to get answers to some questions that they have and they didn't even think about it, right? So once again, this is Elaine Proby from PROBY'S Tax and Accounting. Been in business for over 35 years, 25 years at the same location here on Crenshaw Boulevard in Los Angeles, right? And so I can answer questions if you guys put them on the screens. Here we're going live from Facebook and IG, so I might be going back and forth, but I can answer questions if you guys put them on the screen. And if not, of course, I have questions that people have always been asking over the last, I don't know, however many years, and especially now, because a lot of businesses are having a lot of issues right now, okay, to staying afloat and operating. So let's start with some of the people who are new in business. Now, the most popular question, the number one question that I get from everybody who wants to start a business, and it's not that it's a bad time to start a business. No, you can start a business out. There's always a need for businesses, whatever your services or your product might be. But one of the biggest questions that most people have, especially the new people, is should I incorporate? Right? Biggest question, should I incorporate? And for the most part, incorporating, my is, okay, what is your business projection? Okay, what it is that you want to do, how far do you see this business going, how large do you want this business to grow, and more so than all, what type of product or services are you going to offer? There are some product and some services that has more liability than others, right? More liability, and you might want to have that protection. So if that is your business and that's something that you're planning on doing, then of course you want to form a corporation so you can have that corporate veil and you can have some liability protection. All businesses don't necessarily need that protection. So if you're one of those businesses, there's not so much a question as should you. It's the answer is you should. Okay, so that's that's the biggest, the most popular. And then, of course, if you want to know the difference between the different type of corporation, you guys, whether it should be an LLC, whether it should be a regular C corporation, whether it should be an S corporation, whether it should be a partnership, I'm not going to get into the details of what those are specifically, but I can tell you this, that if you are a one owner operation, then we really would have to discuss further whether you should become a one-owner LLC or whether you should become an S corporation. And so those are things that we can discuss further. If you guys want to call us here at PROBY'S Tax and Accounting at 323-290-9034, we can get into more detail. There's like a free 15-minute consultation, and then we can get into more detail of the difference between a C corporation, an S corporation, a partnership, an LLC, or whether you should operate as an individual. Okay, so that is the most popular for all the people. As a matter of fact, there are people who are running individual businesses that's running hundreds of thousands of dollars, right? And they're filing a Schedule C as an individual business on their tax return. And now, in that case, you guys, yeah, it's time to incorporate. So I usually advise those people to form a corporation, and then there's a lot more tax advantages and different things that we can discuss later and we can talk about. So you guys feel free to give us a call at PROBY'S Tax and Accounting, 323-290-9034, and get the difference between the various type of incorporation or type of entity that you should be operating under. So any questions from you guys out there? Share this video. People may have questions regarding this stuff. Share the video. Okay, and then type your questions below. I'm gonna look for them. Type your questions below, and then of course I'll go back on here and answer those questions, or I'll try to answer them now if you put them out there. Okay, so for the businesses that are already up and running, now this is not, even if you're up and running, you may want to change your structure. You may want to change your business entity. So I wanted to double back on that, guys. Not if you're only starting a new business, but if you're already operating, you might be operating in the wrong structure. You might be operating as an individual, and you might need to change your structure. So this doesn't mean that you have to be a new business or you have to be starting a business. If you're already in business, this is great for you as well. Okay, so now one of the other things that is a very, very, very popular question is, should I have different bank accounts? Now I get this question all day long. Everybody calls me or sit at my desk, should I have a separate bank account? Answer, yes. Yes, you should. You should have a business bank account. You should keep your personal funds separate from your business, guys. Keep them separate. Have a personal bank account that you operate all your personal business out of. And then you have your business bank account that you do all your business out of. So that's the first thing you want to do, is set up a business bank account. Now, on that note, some businesses, you should do more than one account. Now, my suggestion to those people who ask this question all the time, and one thing I got to give it up to all my business folks, you guys really follow instructions. They always follow those instructions. They always do that right. And so another thing that I advise, if you are operating a business that, say, is a retail or any business that's collecting sales taxes, for instance, you want to set up a separate bank account and put those sales tax money in there. Now, a lot of businesses fail. A lot of businesses fail within the first 3 to 5 years. One, because they get into tax problems. If you're doing sales taxes, if you're doing payroll and you have payroll taxes, I would advise set up a separate bank account for the taxes. Have your general bank account, and any money that goes in the tax account is not your money. It's for the government, so you know not to touch it. That is really a simple and easy way to save and make sure that you don't spend the tax dollars, because it is a very expensive loan. It is a very, very, very expensive loan. The interest and penalty on those dollars is astronomical. It's an expensive loan, and it's one that your business do not want to have. Okay? You don't want to have that at all. So make sure that you have a separate bank account for your personal. And on the business side of it, you should have a general bank account that you do all of your operational matters out of. And in some cases, people would have a payroll account, which is great. And most importantly, have those tax dollars set aside, because most businesses go under because they wind up owing taxes. They wind up getting deeper and deeper in tax problems, interest, penalty, compound, and they can't get out of them. And that's a problem. And just on that note, just a quick story on that is I've seen clients who have been referred to me later on with tax problems, right? And these clients would have gotten contracts. I've seen one client have gotten contracts, millions of dollars in contracts. And you would think after projecting and budgeting, and you just landed $1 million contract and you did all your numbers right, that you should come out of this thing with a great profit, and this should be wonderful. I've seen clients come to me later on with tax problems who have gotten $1 million contracts, and at the end of that contract, they may have to file bankruptcy. Now, you know, I'm sure you're out there thinking, what really happened, right? It's definitely not taking care of the money right, okay? And you have to make sure that when you budget, when the money is scheduled to do certain things, you have to do that. You have to pay the payroll. You have to pay the payroll taxes on time. And so they wind up, not only did they go out of business, they wind up on the federal government hundreds of thousands of dollars in payroll taxes. I know you wonder, how did that really happen, okay? So once again, guys, money management, seriously important. That's a huge question regarding separating personal, separating general operational on the business, and separating your taxes. So I get those questions all the time. All right, so any questions out there? Hi Don, hi Sarita, thanks for tuning in. Jay Tasha and the Mighty Dre, thanks for looking in, guys. Hi Tone. Any questions from you guys? This is Elaine Proby from PROBY'S Tax and Accounting here in Los Angeles. And we've been in business for over 35 years, helping people making millions and millions of dollars, and you can too. But there are certain things that you must do. And I know if you have any questions or any concerns, right? A lot of people don't always know what their problem is, but they know they're having one because for some reason they know things are not going right, structure is not right, the operation is not right. They have issues with tax filings, they have issues with bookkeeping services and, you know, keeping records. So they don't know that that's right. But so if you have a question, it might help someone else with the answer if in fact they have the same problem you have. Okay, so I see a couple of questions over here. All right, what business structure? What business structure would give you the most tax? Okay, what business structure give you the most tax break? Okay, so there. Now that's a question I have over here in IG. What business structure give you the most tax break? So let's see. When you have a corporation, right? You're incorporated. You've been operating as an individual, and if you have a Schedule C as an individual business on your tax return, okay, every single dollar in profit over $400, you wind up paying Social Security taxes on. You pay income taxes on it. And so your tax, Social Security, your tax and income taxes, right? This is the individual business that's filing on the Schedule C. A recommended business structure which will help out in taxes, guys, is forming an S corporation. An S corporation will help you with Social Security taxes. The rule is, if you pay yourself a reasonable salary, all right? You pay yourself a reasonable salary. You pay into the Social Security account from your S corporation, put yourself on payroll. You pay into the Social Security account from your payroll, and you pay yourself a reasonable salary. The net profit from your S corporation will then come to you on a K1 as opposed to it coming from a Schedule C where all of the profit is taxable by Social Security. The net profit shows up on a K1, right? And on a K1 that you get from the S corporation, you don't have to pay into Social Security again because you have already paid Social Security on your payroll check. You have to be on payroll and you have to have Social Security coming out. So that's the question, the answer to that question. So it's savings on your Social Security that way. And then there's other advantages that you can take as an entity, as an incorporated entity, as opposed to being on an individual basis. And so you guys make sure that you give us a call at the office. You can get a 15-minute free consultation to get deeper into some of this stuff. 323-290-9034, and that's PROBY'S Tax and Accounting, okay? So any other questions out there? Any other questions? Any other questions? All right. I'll look on the screen and see if you guys have any, but then I'll give you some more questions that I had, as a matter of fact, just this morning. Just simply this morning, I had a client call and ask, okay, and you know, they told me, they said, well, look, I am having a problem getting qualified employees. And I said, wow. I said, that sounds like everybody. Everybody's having that problem getting qualified employees. And they was like, well, you know, I get all these people that they said they want to work, but nobody really wants to work. And so, you know, what do you think that is, or what, you know, what should I do about it? So qualified employees, we all need those, right? They build our business, and they make our customers and they make our clients happy. The clients pay well. The employees take care of the clients. This is what I've been told over and over. The employee takes care of the clients and the customers, right? The customers take care of the business, and then it circles back around to you. Now, to get qualified employees, guys, I know this might sound like it might be a little bit difficult, but you will have to pay. You will have to pay, and I know this sounds like, oh, I can't afford it. You will have to pay more money to get more qualified and experienced employees. And now let me tell you this, okay? So there's a story. I had run my business for years by myself, thinking that I cannot afford to pay employees to help. I cannot afford to pay qualified employees to help me. And I said, oh no, there's not enough money, I can't do this. Well, guess what? You can't not afford to do that. You can't. You have to sit and budget, and you have to do that to pay the proper salary for the experienced people, for the people who really want to work, people who's going to help your business grow. And those are the people you need to hire. You have to pay them well. You have to take care of your employees. You have to know their concerns. You have to know what makes them happy. You have to create a great environment for them to work in, where they want to stay with your business, they want to help you grow, and then in result, you will benefit, they will get paid well, your customers and clients will be happy, and this is generally how you have to work it so you can get qualified employees to make your business grow, okay? So if that answers you guys' question, unless you have something else regarding that matter, qualified employees, very important to the business. Without qualified employees, your business will not grow, okay? And you're subject to fail. I learned that. Hi, Don. So anyway, so that's the question. That's the answer to that. So I got that question this morning. How do you maintain or get qualified employees? And that's what you got to do. You got to take care of them, and then you got to train them, and you got to make sure that they're happy. Okay, and so then that's the way you keep them, and then your business will continue to multiply. Your business will continue to grow. Okay, all right. So how are you guys doing? Once again, this is Elaine Proby from PROBY'S Tax and Accounting here in Los Angeles. Our office is open 5 days a week. You can call our office at 323-290-9034 if you have any more questions on any of these subjects that we talked about. I have a couple more questions that's been asked of me, and I will give you the answers to those. But right now, I want to make sure that you guys did get something out of those questions, out of those answers. And if you have any of your own, I want you to know that you can call the office and set up a 15-minute free one-on-one consultation if you have any further questions or concern about your business. Right now is the time that we really have to work on our business structure. We have to take inventory. We have to take note of what we're doing in our business for it to survive this crisis, for us to maintain and get through, and for us to make sure that at the end of this, we're standing strong, we're standing tall, and the business survives and becomes more viable. So this is a great time to take inventory and see what it is that we need to be doing in our business, okay? So, all right, so let me get to another question that most people have that they ask me all the time, guys. I'm telling you, this is for 35 years I've been in this business. I get so many questions all day long. And you know, I really applaud the people who wants to make sure that they're doing things right from the jump. And if they're not, they want to make sure that they correct it. And I have people who have said to me, I've been doing my taxes somewhere else for years. I've been doing all my stuff somewhere else for years, and no one ever told me this stuff, you know? And in less than an hour at my desk, they leave and they've gotten a wealth of information that keep them going that they never got in years. So I have a question up here. If you have a business and haven't made any money, do you still have to file a tax return? Yes, if the business is an incorporated business, if the business is an incorporated business, guys, if you made no money, you still have to file a tax return. you file a zero return. We call it a zero return. There's no income, there's no expenses. And you know what? A lot of times too, there may be expenses because you probably spent some money to keep the business current, to keep the business active. You probably had to pay taxes or fees to the Secretary of State if you're in the state of California, where you have to pay for that. So there are maybe a few expenses that you're not thinking about. You probably have a website and you probably did some advertising, but what you probably didn't have is income, right? So if you have no income, you still need to file. If you're an incorporated business, you're still required to file. You're required to file a tax return from the year you incorporated that business till, of course, until you dissolve it. So you do have to file a tax return if you're in business. Now, of course, if it's an independent business and you're operating as a sole proprietor and you have no money, this would go on your Schedule C. You didn't make any money or you didn't spend any money, but the business is up. You may have gotten a business license. You know, that would be incorporated in your personal taxes. And if you spend some money on a business license, we'll put that on there. If you have no income, then it would be zero. So, yes. All right. Let's learn. Any other question out there, guys? All right. Hi, Natalie. Okay. So, can I have a loss on equipment that breaks and is untaxable? Let's see, what's this? I'm trying to get this question. Can I take a loss on an equipment that breaks and is unfixable? Okay. Can I take a loss on equipment that breaks and is unfixable? Well, first of all, when you bought the equipment, okay, when you bought the equipment, right, you will do two things. You will write off the expenses in the year that you buy the equipment if you're on a cash basis. You will write off the expense for that equipment, or you would depreciate that equipment over 3 to 5 years. So the money that you spent on the equipment, you will continue to write that off anyway. So you have that as a deduction. So yeah, you will be writing that off anyway. So it's not that you have to take a loss. Now, if you had to repair that equipment, you can write off the monies you paid to do the repairs, right? So the purchase price, you write that off. You can expense it all, or you can do a depreciation, which at the end of the day, you can still write all of it off. And if you had to pay for repairs, you can go ahead and write off the money for the repairs. Yes. So if you have an equipment that's broken, you would have already taken the deduction for the purchase. You would be writing that off. All right. So any other questions? Let's see over here. We got the Instagram and the Facebook going, you guys, and you know I'm testing this out. So hi Glenda, thanks for tuning in. All right. So okay. Any other questions, you guys? I have a couple of other questions that people ask me all the time, right? And a lot of people are concerned. I have a client who said to me, they came to me with a tax problem, and it's just so many, you know, and our business, not only is it tax and accounting, but we have a small business solution department. And when the small business solution department was formed, it was basically to do entity formation, and it was basically to, you know, to make sure that the business stay compliant, right? But the part of that department that is really growing is a tax problem department, guys. I mean, unfortunately, the department is growing. I have a client that came to me with a huge tax problem, and they said to me, you know what, I was doing so much better when I had a job. I thought going into this business, I would have done better. And since I've been in the business, things have just gotten worse. Now, so on that note, guys, the question that was asked to me, they said, well, why is this happening? And you know, my answer was because when you started the business, you didn't have a solid plan to work from. And you know, when I started my business, I went to the SBA meeting and they tell you need to have an accountant on board and a lawyer on board. You know, you have to start off with a good, sound business plan, and you got to have a structure. And what happened is people start off, and the first thing they start doing wrong is paying payroll, not paying taxes, not filing taxes, getting late fees. And in the first year of business, they have a tax problem, right? And so I wanted to answer that question, not only because the plan wasn't there and because things wasn't done right. And so this particular client, when she came to me with this problem, she was already deep in the hole with taxes. But there are, besides the income taxes, there's other regulations, other government regulations that you guys have to make sure that you have in place. You got to stay in compliance. You got to make sure that your business is active. If it's a corporation, you have to have your business license. You got to be filing all the necessary taxes. And more than ever, file them on time. The late filing fees and the late paying fee, and when that adds up, it's almost 40% of the tax liability that you initially owe. So this is the thing, you guys. So you have to either have someone that you're going to be calling for consultation on a regular basis to keep you going, you know, maybe every quarter, so you can stay in compliance with all this stuff. Because this is a question everybody's got. It's like, why I got to go through all these government regulations? Well, you know, that's a part of the business research. And you should know that there is these things that you have to get your licenses, and you got to pay to make sure that you're in compliance. All right. So anyway, so I wanted to make sure that you guys stay on point of your compliance issues, government regulations, licenses, right? Stay current, stay active. If you have a corporation, you have to file a statement of information annually. You have to make sure that you do these things, right? So anyway, here at PROBY'S Tax and Accounting, we're here to help you out with all that stuff. Give us a call at 323-290-9034. Visit our website at probiztax.com, okay? I think there's another question over here. How can I establish the right, profit margin for my business? How can I establish the right profit margin for my business? Okay, so establishing the right profit margin for your business. Now, profit margin, that's going to be in your budget and projection, right? So one of the things that most small businesses don't do, and you know, it's part of a downfall, part of the reason why they said 40% of small business fail in the first 5 years, and 10 years later, another 15% of those that stay, so 65% is gone within 10 years, right? So if 65% of the small business is gone within 10 years, that's a lot. That's a lot. Even 40% in the first 5 years. Your profit margin that you're speaking of is something that you would be projecting. So when you set up and you create a budget, right? You create a budget when you start. You budget that this, you project that this is the amount of income you're going to make. And then, of course, you have all the various expenses, all the things that are necessary for you to generate that income. Okay, so you have to have all this stuff lined up. All the monies that it's going to take for you to be able to create the income projected, right? You got to have that. And so then, of course, with that being said, this is going to be my revenue. These are going to be my expenses. And this is going to be my profit. Okay, this is going to be my profit. So your profit margin, that's the projection. One thing that a lot of small businesses fail to do is fail to do proper accounting. And the reason why you don't know if you are meeting your budget or you're meeting your profit margin simply because you don't have any accounting done. I mean, if you account for something after the fact, this is a year later now, I'm going to do my 2019 accounting, and here we are in 2020. And if you do that, then everything that went wrong in 2019, you're halfway in 2020, you haven't fixed anything, right? You want to do your monthly or quarterly accounting, your bookkeeping record. You want to look at your bottom line column over there so that you can see what your budget is, see if you're hitting that. You want to take an inventory of all your expenses. See if you're spending money unnecessary. See if there's anything that you didn't have to spend money on. See if there's stuff that you can cut back on. See how you can take advantage of maybe suppliers if it's one of those retail businesses where you can buy in bulk. Maybe you can buy in bulk and save money. This is the purpose of having good accounting system. This is the purpose of having a financial statement. And unfortunately, a lot of our small business don't take advantage of that. You don't do your regular accounting and bookkeeping, so you don't know where you are. You are operating blindly, okay? You're in this car, you're driving in the dark, and you don't know where you're going. So your profit margin, you can achieve it, but you have to pay attention. You have to have proper accounting records, and then you have to itemize and make sure that you zero in on all your expenses so you can achieve your profit margin. All right, so there's another question over here. If someone haven't filed taxes in years, 3 to 5 years, etc. How do you handle that, and what kind of penalty? Okay, so if you haven't filed taxes and you had an obligation to file taxes, you had made money, you should be filing taxes. Here at PROBY'S Tax and Accounting, we get a lot of people that we have to file back taxes for, right? So that's not a problem to get them filed. However, if you owe, guys, if you owe, and you're going back 3 to 5 years in taxes, you're going to be paying late filing penalties. And if you owe money, you'll be paying that liability, late filing penalty, and late payment penalty, right? That's a lot. That's a lot of penalty. For instance, if you owe $5,000, that bill is subject to be about $7,500 or over $7,000 when all that penalty comes back. What I always suggest is, if you're going to owe, instead of not filing the taxes, file the taxes. File the taxes, make an installment arrangement to pay the taxes. At least you will save on the late filing penalty, okay? And that's huge. So, answer to your question, 3 to 5 years, how we handle that, we'll go back and file those taxes. However, my suggestion going forward, guys, is to file the taxes even if you're not able to pay, okay? So that's what we want to do. All right, so any other questions from you guys? Any other question? Okay, let's see. Establish, okay. All right, so that's it for you guys' questions today. I have a lot more questions. We could be here all day long with questions that clients would call me on or sit at my desk and ask, and or call in. We can touch on a lot of stuff with cash flow and technology and workers' compensation and insurances. There's a whole lot more. So we'll have to do this again. This is great. We'll have to do this again. The key thing here, though, is to make sure that you stay on top of your game. You guys stay on top of your finances, stay on top of your budget and your projection, and stay on top of, make sure that you have good plans, planning, and that you, this is time to sit back and take inventory. Make sure that your marketing budget is on point, and make sure that you stay on top of your accounting, all right? And get your taxes, if your taxes filed. PROBY'S Tax and Accounting, you guys. PROBY'S Tax and Accounting here in Los Angeles. Go to our website at probystax.com. If you need to file anything, we've got a secure portal there. You can upload all of your information. This is Elaine Proby once again from PROBY'S Tax, in business for over 35 years, you guys, and got lots of great stories for you, lots of ideas of how you can stay in business, right? Everybody tells you how you can promote and how you can market, how you can get business, but guess what? We want to stay in business. We don't want to be the 40% that fail in 5 years or the other 15% that fail in 10 years. We want to stick around so we could be here 35 years like this business I have. So I want to teach you guys how to stay in business, all right? So I think that's it for me today. We'll be back with this again. This is great. Thank you guys for tuning in. Hi, Lerner. Hi, Dre. Hi, Tukayam. I appreciate you guys for tuning in, and we will be back again with some more questions. Make sure you get them all together, and we will be back to see you guys soon.